Good evening, this is Ryan Mallory for SharePlanner.com. Today is November 23rd, 2010. Only 2 more days till Thanksgiving. So I think after the day we had today, everyone will be ready to watch some football and stuff themselves with turkey and then consequently fall asleep on the couch in hopes that the market never opens up again. Um, and then for the ladies, of course, you have the Black Friday, which, and I guess there's a lot of men that are doing that nowadays too because they want to try to jump on those deals. I've never been a Black Friday person myself, but all right, enough of that. Rough day in the market for the bulls. Here at SharePlan, we try not to get caught up, on uh, good days being only when the market goes up and bad days when the market goes down. We are nimble and flexible enough to where we play both sides of the market. Uh, I, for one, usually will always have a myriad of long and short positions going at once, and today I opened up the day at 2% short and I finished the day at about 8% short. So that was due to one of my positions getting stopped out early on, and thankfully that it did because CEL went much lower from where I got stopped out at about 1 full% lower. And that's a big difference in the performance on your day. And a good reason why stop losses work. Some folks like to ignore them. I believe that they are essential to success in trading. So um, overall, the big loser on the day was probably Harris Corporation. The big winner on the day was Adobe, followed by DirecTV. Um, Both of those had solid production. Although Adobe did rally a little bit, in the second part of the day off of lows that were as much as 6% down at one point. But I do have a stop loss that was raised in Adobe to about 28.55, so there is a good possibility that I get stopped out on that on any market week strength tomorrow. And right now, as we speak, it's about 8:14 in the evening, and the market is up about 4.25 points on the S&P. So uh, unless that changes, that will put some pressure on my position in Adobe tomorrow. Okay. Jump in here, and one of the things that I found fascinating today was the volume. Now, just looking at it, you don't think that there's much ado about what we saw volume-wise. It looks like a very normal day. However, well, it's not going to let me really draw a circle around that volume bar, but today, despite it just being averaged by historical means, very high for 2 days before Thanksgiving. Usually that volume is dropping off dramatically. Today it wasn't. There was a lot of selling in the market, and it just shows you that there was a lot of momentum behind this move today. Uh, One thing that we can highlight here is that there is a bit of a bull flag being created in the market. However, I think that should be secondary to what we are seeing so far. Namely, is the trend line continues to flatten out, and at some point you gotta say, okay, when is this trend line no longer valid? And for simplicity's sake, I'll quit flattening out this trend line once we put in a lower low in this market, and that won't come until we break through 1173. There was the opportunity for that today as we dropped as low as 1176. Had we dropped about 3 more points and closed at that level, then that would have made a heck of a difference in tonight's chart session on the S&P. Um, but we didn't, and but we did. I would say the Bears definitely made a lot of headway today, though. I mean, any time that you close down 17 points on the S&P, 142 on the Dow, whether it's up or down, you're making headway in the direction of the trend. Now, for today, we did break below 1183, and I said that was an important level here, mainly because it would create a low from the past 3 days of trading, and that would make it a lot more certain that we're going to put a lower low in this market. From my perspective, I think we will. I don't see us bouncing dramatically and making new highs here in the near future. I think what we'll see in the cards is a test at 1173. I think we'll break through it, and I think we'll move lower as a result. The next support level at that point is roughly about 1150 on the S&P, and that will be the next critical support area testing place for the S&P. 1200. I mean, that's about 12 20 points away now, and I don't really see that in the cards for tomorrow or anything to really pay attention to. I think going in tomorrow, I think the Bears want to push this market and close below 1173. That also coincides with the 50-day moving average, and beyond that, there's really nothing more that's more important to the Bears at this point. For the Bulls, is A, to make sure that it doesn't happen, and then B, to at least start trying to fill the gap or come close to it tomorrow. Today's highs, on the S&P was 1192. For me, if I was a bull in this market, I would want to see the bulls push above and bounce very aggressively above that 1192 level, and that would do a lot to repair the damage that was done today. The place that I want to see the market go before I really get on board that the bulls are still in control of this market is the 1200 level. You break the 1200 level, then the bull trend is back in business. Hands down, that is a certain, especially with that little bullish flag that's working in the market right now. But if we can't do that, we do push below 1173. There's really no point at being long on anything at that point in the market. So that's about it. The weekly chart on the S&P, you got the 200-day moving average looming large. I'll get rid of this line here, but see how we did close above it yesterday, and it's not very typical for us to be dancing around the 200-day moving average like we are. Usually if we break through it, we move higher, but as you can see in the last 2 weeks, it's definitely been above and below it quite a few times. But now, as of today's price action, we are back below the 200-week moving average, and as you can see here, from many times in the past, one time being there and another time being there, when we test the 200-day moving average and we move below it, then there's usually a little bit more downside in the cards. So that just about does it for us here. I did get into a couple of new stocks today. TIE, you can see I really like the pattern that we're seeing in this stock here, particularly the breakdown below the 200-day moving average. And then MENT, which was sort of like a last-second trade for me. I wasn't really planning on getting into this, but when I saw that, I got back into this, I think, or back in it originally in November, and what you have is you have this very nice consolidation area here where the stock just went back and forth for quite a while, and then you had this huge breakout, and it was a very aggressive breakout, very good, solid price action. And then today we had this pullback right down to the 1101 areas, and so I got in at 1106, feeling that there was a lot of upside left in this stock. So if you guys have any questions, be sure to join in the chat room tomorrow, or join us on the live charts, and you can ask me questions, concerns, you name it. I'll do the best I can to help you in trading this market. And with that said, if you guys aren't able to come to the website tomorrow, I hope you all have a wonderful Thanksgiving. Take care now.